This is Christopher Lewis from the dailyforex.com trading desk looking at the upcoming March 2nd Forex session. Pair I have in front of you is the dollar Swiss pair, and as you can see, I have it zoomed out a bit over the last several months, and we've actually had a significant run up recently to the 95 level and then have pulled back. I had on my chart the Fibonacci extent or retracement tool from the move up, and as you can see, we stopped basically right at the 61.8 a few days ago. This is in fact the Wednesday candle. This is a candlestick formation that you don't see very often. It's more or less a triple low high close, three lows and a high close in a row. That normally is a reversal signal. The fact that it is at the 61.8 makes it even more powerful, as well as the 90. Now, looking at this chart, you can see that there are clusters above, and as such, 91 will more than likely provide some type of resistance, as it is right here, and it is just underneath, or just over, excuse me, the 50% retrace. These levels do tend to cause reactions to price over time. It will become less and less interesting to the market as time goes on, obviously. But with the Swiss National Bank working against the value of the franc, more specifically in the euro Swiss pair, it's very unlikely that the franc can appreciate too much. The euro Swiss has a floor in it at 120 and is currently trading right around 120.50, so it really doesn't have much farther to fall. In order for this pair to really skyrocket to the downside, you'd have to see the euro Swiss break down, and that just is not going to happen. With that being said, this should be a buy only pair, and as such, I am looking personally for a breakout either of the doji or more specifically for pullbacks, as I believe we are in the middle of a bit of a basing period. I think 95 will be revisited. It does make sense. And then in times of trouble, the franc has traditionally been a safe haven, but in this backwards environment we find ourselves in because of central bank intervention, the true safety currency now is the dollar. Because remember, the yen's being worked against by the Bank of Japan as well. So the dollar will appreciate in any kinds of trouble, and therefore could rise in this pair as well. I personally believe at the end of the year, at least by then, we will see parity again, but it will be choppy on the way up. I mean, remember, this has been in a downtrend for quite some time. With that being said, though, if you're willing to be patient, I think that on pullbacks, this pair should be rewarding over time.